Hey everyone, welcome back to Corporate Decoder, the place where we learn that sometimes buying businesses is as simple as a handshake, or in this case, a very long and important agreement. Today we are diving into a Form 8K filing from Vireo Growth Incorporated, and let me tell you, this one has some interesting details about a major deal they are cooking up. We are going to decode what this all means for the company and you, the investors. Before we get started, if you appreciate getting straight insights from these corporate filings without the fluff, make sure you are subscribed. Also, we have a growing community over on Discord, link in the description below, where we break down these reports even further. So, the big news here is that on the 16th of December 2025, Vireo Growth Incorporated, through its wholly owned subsidiary Vireo Health Inc., entered into a significant agreement. This is not just a small deal, it is an asset purchase agreement, or APA for short. Think of it as a formal contract to buy a bunch of stuff. Vireo Growth Incorporated, which is the parent company, is involved here. The buyer in this deal is Vireo Health Inc., a Delaware corporation and a subsidiary of Vireo Growth. They are buying assets and properties from PharmaCann Incorporated and some of its subsidiaries. What are they buying exactly? Well, they are acquiring assets and properties tied to specific cannabis dispensaries that PharmaCann and its group operate in Colorado. It is important to note that there will be some exclusions from what is being purchased, as is typical in these big deals. Now, how is Vireo paying for all of this? It is not with cash directly, at least not entirely. Instead, the buyer, Vireo Health, will issue subordinate voting shares of Vireo Growth Incorporated to Argent Institutional Trust Company, which is acting as a collateral agent. The value of these shares is set at a hefty $49 million. On top of that, Vireo will also be taking on certain liabilities from the seller. This means Vireo is essentially using its own stock as currency to acquire these assets, and will also inherit some of the seller's financial obligations. There is also a management services agreement in place. This means that as part of this deal, an affiliate of Vireo will be providing management services to the dispensaries being acquired until the deal is officially closed. This smooths the transition and ensures operations continue without too much disruption. Like many of these large agreements, this APA has several conditions that must be met before it is finalized. One of the most critical is getting the necessary regulatory approvals. For instance, if the Colorado Department of Revenue's Marijuana Enforcement Division raises objections or does not approve the transfer of these assets, the deal could be in jeopardy. They also have a target closing date of the 1st of June 2027, giving them a good amount of time to sort out all the details and get the green light from various authorities. It is also good to see that there are specific outs should a government body issue an order preventing the deal. Now, why are they filing this as a Form 8? Well, this filing is to let the public know about this material agreement. They also issued a press release on the 16th of December 2025 to announce this development, and a copy of that is being attached as an exhibit to this filing. This is standard practice to ensure transparency with investors and the market. It is worth noting that Vireo Growth Incorporated is identifying itself as an emerging growth company. This means they can take advantage of certain regulatory flexibilities, but it also signals that they are likely still in a growth phase, which can come with its own set of opportunities and risks. As with most of these filings, there is a section on forward-looking statements. This is essentially a disclaimer. They are talking about potential future outcomes, like the completion of the transaction and its benefits, but they are warning investors that actual results could be very different due to various risks and uncertainties. They mention potential adverse impacts on their business and operations, challenges in maintaining relationships with suppliers and customers, and the overall outcome of pending legal or regulatory proceedings. It is a standard but crucial reminder that the future is never guaranteed. They also point to their previous filings, like their annual report on Form 10K for the year ended the 31st of December 2024, for more detailed risk factors. The attached press release, Exhibit 99.1, will likely provide a more company-friendly overview of this APA, usually highlighting the strategic benefits and excitement around the acquisition. It is always a good idea to read the actual agreement, but the press release gives you the executive summary. Finally, the report is signed off by Tyson McDonald, the Chief Financial Officer, on the 22nd of December 2025. This shows the company's commitment and acknowledgement of the information provided in this filing. So, what is my take on all of this? Vireo Growth is making a significant move here, acquiring $49 million worth of assets in the Colorado cannabis market by issuing its own shares. This strategy of using stock for acquisitions is common, especially for growth companies, but it does dilute the ownership for existing shareholders. The success of this deal hinges heavily on regulatory approval and the successful integration of these dispensaries into Vireo's operations. If they can navigate the regulatory hurdles and extract value from these new assets, this could be a substantial win. However, the risks are real. Any delays, unexpected regulatory roadblocks, or failure to realize the anticipated benefits could negatively impact the company. They are clearly betting on expansion and consolidation in the cannabis space, and this APA is a big bet. The key will be execution and managing the added complexity that comes with a deal of this size. Alright? That is our breakdown of Vireo Growth Incorporated's recent filing. What is your take on this acquisition strategy? Do you think issuing shares for $49 million in assets is a smart move? Drop your thoughts in the comments below. If you found this analysis valuable, hitting that like button really helps us out, and subscribe for more deep corporate dives. And again, don't forget to check out the Discord community in the description for more in-depth discussions. Thanks for watching, and we will see you in the next video.